Hey, we had a pretty confusing day in the real estate world yesterday. The Fed, obviously, as I'm sure many of you have heard, cut interest rates by 25 basis points. And you may have also seen the headlines that the mortgage market, mortgage interest rates, mortgage bonds did not respond favorably. Look, I'm going to do a more in-depth analysis of this in a podcast, my podcast, Mosaic, the Stories of Real Estate, next week. And I'll alert everybody to that on X. You can follow me on X. But why does this happen? Why does the Fed cut rates and real estate not get a boost out of it? Well, it's all about inflation. And so, yes, they cut rates, but if you look at the press release and the additional documentation that the Fed comes out with, they really signaled some inflationary fears for next year. So they reduced their predicted number of rate cuts next year. Again, I'll go into more detail on this next week. But they also indicated they think the economy is doing much stronger than you may be feeling in your pocketbook. And they also indicated they think the unemployment rate is going to stay lower than they originally predicted. And so low employment, low unemployment, meaning a lot of people working, is inflationary, and the mortgage bonds market doesn't like that. So that's really kind of the genesis, the reason why mortgage bonds didn't do all that well yesterday, and they're not doing that well today as well. Look, couple things to look forward to. Check out my podcast, Mosaic, the Stories of Real Estate. You can find it on all major podcasting networks. It'll come out next week, some additional color on this, but I'm also going to come up with some timing for my 2025 outlook based on data from MBS Highway. That'll come out in the first or second week of January as well. DM me, call me, text me, 720-419 if you want to continue the dialogue. Happy to try to explain some of this confusion to you as well. Have a great holiday season. Hope to talk to you soon.